if you've been reading the national headlines or even looking at the statewide data for Florida, you're probably terrified. You're seeing reports of inventory piling up on the West Coast. You're seeing prices slash in Cape Coral and Northport. You're hearing that the pandemic boom is officially bust. If you are an outsider looking into the best place on earth, Florida, you might think, should stay away from Florida. The party is over. What do you think, Raul?
Andres, but if you apply the logic to Miami in 2026, you are going to miss the single most resilient investment window of decades. Because here's what the data is actually telling us for 2026, Andres. Florida is not monolith. It is fracturing. We are seeing what I call the great decoupling.
Yeah, definitely. While the rest of the state prepares for a correction, or not even the state, the rest of the U.S.
That's right.
Miami is doing something completely different.
Yes, that's right. And you may ask why, because it is stabilizing the prices. It's pivoting. Pivoting. Is it pivoting?
It's pivoting. It's pivoting.
Pivoting, and it says in a specific pocket, it is growing. In this masterclass, we're going to break down the 2026 Miami market report. We are going to look at why Miami is projected to grow while Tampa is shrinking. We are going to talk about the new grandbaby effect, driving wealth migration from the north to the south, to South Florida. And we are going to look at the exact mortgage rate stabilization that is changing the game for institutional buyers.
Well, Raul, if we're going to analyze data and if we take the macro data versus Miami versus, let's say, the rest of the US, let's start with the hard numbers, because facts don't care about your feelings, my feelings, or everybody's feelings. It's numbers. And econometric models for 2026 are painting a red map for most of the Sun Belt. Cape Coral is projected to see, Raul, a price decline of, what's the percentage?
Around 10, Andres. And Tampa is looking at the decline of the 3.6. North Point is down nearly 9%, Andres.
It's crazy. Why is this happening there? Well, it's simple economics. Those markets have unlimited land. They sprawled. Builders put thousands of spec homes, and now, as demand normalizes, they are drowning in supply.
And now look at Miami. The projection for the Miami metro area in 2026 is positive, at least 1.1% growth.
Okay.
Now you may say 1%, that's nothing compared to 2021. And you're right.
Yeah,
but
could be
we
true.
are not in 2021.
Yep.
But in a high interest rate environment, with an insurance crisis, staying positive is a miracle, especially in the rest of the United States. It proves that Miami is an anomaly.
Yeah.
That's the right word.
But Raul, let me ask you something. Why do you think that Miami decouple? Is it geography?
Mm-hmm. Yes, of course. We are in a special location. We are. This is a strategic state or place or spot. We have the Atlantic Ocean to the east. We have the Everglades to the west. We literally cannot build more land. When you have finite supply and global demand, prices have a hard floor. They cannot crash the way they do in the sprawling suburb.
But Raul, let me ask you something. And let's talk about the financial landscape, because rates and cash, those are some things or items that we need to pay really close attention to. Let's talk about the money, right? Mm-hmm. What does the capital environment look like for the coming year, let's say that we are already in 2026,
Mhm.
and the volatility of the last 3 years is, let's say, fading, and
Vanishing.
the what?
Vanishing.
Oh yeah, let's say they're gone. They're definitely vanished, and
Mhm.
the consensus among major institutions, let's say Fannie Mae, the NRA, is the 30-year fixed mortgage is finding a new home. Let's talk about that, Raul.
Yes, Andres, and we are looking at an stabilization range between 6% to 6.3% in 2026. We are not going back to the 3%. We wish. If you if you are waiting for the 3%, you are waiting for a ghost. But Andres, stability is good. Stability allows investors to model their returns. Stability brings liquidity back to the market. However, Andres, even at 6% affordability is tough.
So,
So
who's buying, Raul?
uh, let's think about this. This is the most critical insight of the report. The buyer profile has shifted. We are seeing the dominance of the cash buyer. A lot of people with a lot of money. In the first half of the 2025, nearly, listen to this, Andres, 50% of the transactions in Miami were cash.
Wow. Well, Raul,
Mhm.
this brings us to let's say that it's a phenomenon.
Mhm.
We're calling the grandbaby effect, right? Because
Mhm.
we have baby boomers sitting on record equity in New York, in New Jersey, California, and they aren't moving to Miami just for the taxes anymore.
No.
Though
No.
no state income tax is an awesome benefit, they are moving because their millennial kids move here during 2020, 2021, 2022, during the
Mhm.
pandemic. And now they want to be near their grandkids.
Yes, yes, for Andres, and the demographic, the wealthy grandparents is completely insensitive to mortgage rates. They sell a 2 million home in Greenwich,
Yep.
and they buy a 1.5 million condo in Coral Gable in cash.
Yep. Well, and this dynamic creates a, let's say, a buffer, right? For Miami's luxury market, it insulates us from the pain that the rest of the country is feeling. And we have two markets. We
Yeah.
have single family versus condos. Now,
Mhm.
we have to get, let's say, nuanced. You
Mhm.
cannot say, I'm buying my real estate. You have to understand that we have two completely different ecosystems operating side by side. First, the single family home. What can you tell me about single family homes in Florida, Raul?
That's a balanced market, leaning towards sellers market in prime areas.
Yep.
Why? Because of the lock-in effect. People who have a 3% mortgage on their houses aren't selling to go to buy a new house for a 6%.
Yep.
Common sense, right? They are staying pat. This lack of turnover keeps supply very, very, very low. And when supply is low, prices stay high. You don't expect to go these prices down. If you own a single family home in Miami, you are sitting on a fortress.
Yeah. Now, the contrast with the condo market, Raul, is that the condo market is flashing warning signs, and we have been talking about this for quite some time. Um, it is when we talk about the condo market, that is a heavy buyer's market. Why? Because of the regulatory storm that we are about to discuss in the next video. So please subscribe to our channel to stay always up to date. And all this have to do with reserves and insurance cost.
Yes, and let's keep going because it's very interesting.
Well, Raul, if we're going to talk about the investment takeaway, which is something that we have to, let's say, analyze. What is the conclusion for 2026? If we are betting against Florida, you might be right about the West Coast. Yes. And the headlines could be right. They could be wrong. They are speculating. But if you bet against Miami, you're betting against the capital of Latin America. And very soon, it's going to be the capital of the world. It's no longer going to be New York. Forget about New York. You're betting against a land constrained global getaway city.
Yes, Andres, and the data is saying the data says Miami's growth, but it grows selectively. It's not
Yep.
growing everywhere. It grows for the cash buyer. It grows for the single family home owners, and it grows for the strategic investor who knows which neighborhoods are transforming.
Yeah.
Do not let the headline from Cape Coral scare you out of an opportunity in Brickell. The great decoupling is real, and it's your opportunity to buy quality assets while everyone else is paralyzed by fear.
Let's talk about our next segment because for now, let's understand this. Miami is standing extremely strong. The foundation is very solid. The question is, are you positioned correctly to take advantage of it? If you have questions, remember to subscribe to Miami Real Group and to share all our videos with your friends and family.